Essentially, the decision made by the Bank of Japan governing board today amounts to something similar to the sort of World War II British wartime slogan, keep calm and carry on. So the Bank of Japan is basically saying it's not going to change its policy because of the very dramatic swings in the Japanese stock market and the value of the yen over the last couple of weeks. It says it has set its policy at the beginning of April this year, and that policy is to double money supply here over the next 2 years to achieve, they hope, an inflation rate of around 2%. And they're going to stick to that, and they're not going to be swayed by short-term volatility in the stock market, even volatility of the scale that we have seen over the last 10 days or so.
And it's interesting you should say that, Rupert, because everybody's looking at central banks at the moment for help. And now it looks like central banks are easing back, if not scaling down a bit, and that's what's put the fear in the markets.
Yeah, I mean, I think what we've seen here in Japan over the last few months is a very rapid rise in the stock market. It went up very far and very fast. And analysts I've been talking to here today say, well, maybe it overshot a bit, considering that, we're still waiting for this money and for these policies to work through the economy. And so now we have seen sentiment somewhat turn a bit. And when sentiment turns, a lot of money bailed out of the market very, very quickly. There was a lot of speculative money in the market that had to get out quickly. And that's why we saw a dramatic drop in the market. And now we're seeing this daily up and down as sentiment goes one way or the other. But I think the hope is that we will see this gradually calm down. And the feeling here is this is still a bull market. There is still growth to be had, and people are expecting the market to continue to go up at a slower pace during the rest of the year.